Salam TAETB. Jumpa lagi di One World Outlook Weekly Market Update. Saya Ahmad Enver bersama rekan kami Bapak Wellian Wiranto selaku Economist dari OCBC Group siap memberikan informasi dan analisa pasar terkini, global dan domestik untuk membantu Anda memilih strategi investasi terbaik. Hi Wellian, good morning and thank you so much for joining us today on One World Outlook.
Selamat pagi, Amber. Thank you for having me.
It's almost been 1 year since the first time you joined us here.
Time flies. Yes, indeed.
All right. Let me start with the first question. I think we are only 3 months into the year, and 2022 has proved to be a very uncertain and volatile year. News are full with worrying headlines such as paper tantrum, war, inflation, and most recently, stagflation and even recession. All this is on top of economists that are still learning and trying on how to live with the pandemic. William, help us understand what is going on here and how did we get here?
Well, I think if we speak to our Indonesian friends, I think the idea of that, I think they will strike a chord. I think obviously also reminds me of this childhood book series of unfortunate events. I think essentially we're hit by at least a triple whammy. Right, you mentioned the idea that the Fed might be hiking rates soon. I think at the end of the day, they are reacting to inflation prints in the US. They are running higher and higher. Some of the prints that we are seeing, headline inflation we haven't seen in 40 years, almost as old as I am. So the situation remains quite uncertain also on the Russia-Ukraine war front. Although recently we hear some relatively more positive news flow about potential for ceasefire, etc. But I think the fact of the matter is that the war is still going on and millions are still suffering. On top of that, I think the concern number 3 starting to come out would be from China itself, with its still zero COVID policy and coming at a time when the economy is slowing down and what they would do to any kind of economic uptick from here. I think a really combination of a lot of factors. I know investors are quite concerned. Investors are generally also a bit confused at this point, but fundamentally what we are seeing is that growth is still staying quite supported. I mean, notwithstanding some of the inflation fear and some of the even recession risks out there. I think right now we still see a global economy that is at least starting to recover from the pandemic last 2 years.
The war is still going on, and I think the nature of geopolitics is quite hard to predict, right? So what are the scenarios that you expect likely to happen within the next 6 to 12 months? For example, will prices in the commodity complex will continue to rise? And if so, how do you see central banks will respond to counter this inflationary pressure?
Sure, I think in a way we have to counter the series of unfortunate events that we've had with a series of fortunate events. I think first of all, the Russia-Ukraine war, I think obviously that's a big bugbear for many. And if there's any kind of positive conclusion to that conflict, be it through some kind of ceasefire, at least this escalation of the current conflict, I think they'll be treated as a big plus for the global economy as we speak. And the idea of the Fed hiking rate, I think that has to come through. They already started hiking rate in the March meeting. I think going by market pricing, they are likely to hike rate by as much as 50 basis points in the May meeting. So any kind of these events, sometimes the markets would want the event to just be done with. I think you probably hear the idea that buy the rumor, sell the fact. I think that they'll probably be coming through. And last but not least, I think hopefully China can get a handle of the COVID outbreak. Already we saw the big city of Shenzhen, which we exports as much as 10.9% of the total exports from China. They have exited the lockdown, even though another major city, Shanghai, is experiencing half lockdowns, rotating lockdowns between the two halves of the city. So hopefully China over the next month or so will be able to also get a handle of the pandemic. So we want to see a confluence of the 3 not so good things previously turning into 3 not so bad things in the coming months before we really have a more certain kind of global market sentiment.
Here, now let's shift our focus to Indonesia. And I think it is interesting that when I look at not only market consensus, but also projections by governments and international institutions like the IMF, Indonesian economy is actually still expected to grow quite strongly this year, back to around its 5% trend. This is despite the various external pressure like you mentioned earlier. What's your take here?
Well, fundamentally, as we know, Indonesia is a relatively insular economy, meaning as much as we export and import, I think at the end of the day, what matters for our economy is really domestic consumption. Basically, Bapa Ibu going out to spend and have a family time in the malls and things like that. Those are the stuff that will really drive our economy. I think fundamentally, we have seen IMF having 5.4% growth forecast for Indonesia, for instance. The government recently downshifted growth a bit, but broadly speaking, still very much in line with our 5.0% expectation for the year. Why is that the case? I think we have to understand that even at 5%, we're really not performing at our full capacity, right? We come through two years of subpar growth. So the idea is that even if we get back to nominally this kind of 5% growth is really not getting back to normal, right? We need to make up for the losses, so to speak. In pre-pandemic years, having a 5% growth is okay. It's not bad. In fact, that's a long-run average we've had over the last 10 years. But coming from the pandemic, to recover from the pandemic, we should really be having 6, 7, or even 8% growth. We are not there yet. Again, partly because of the global reasons, the pandemic, and the war, and obviously China's slowdown affecting us in some ways as well. I think all these are factors that are weighing on growth. But 5%, again, if you take the glass half full kind of view, 5% in this kind of environment is really not too bad.
Not too bad indeed, and I think the market seems to be quite in agreement there. I mean, looking at the JCI index, for example, it has strengthened almost 7% year to date, and yes, it is supported partly by the strong inflows by foreign investors. Looking at the exchange rate, the rupiah is quite stable too. I think averaging around 14,340 levels year to date. The 10-year Indo-GB's yield only rose about 32 basis points year to date, while the 10-year treasuries rose by more than 90 basis points during the same period. So beyond this economic growth story, are there any other factors that you see could continue to support Indonesia's asset performance, and maybe also perhaps share the key risks that investors need to take into account?
Well, I think there are quite a lot of factors to think about. Obviously, the global sentiment is something we have to contend with. But fundamentally, even set against a fairly poor global backdrop, Indonesian assets have performed remarkably well, right? You mentioned in the JCI is doing well, rupiah has been stable, bond yields have been picking up, but really not as much as some of the other markets, including major developed markets as we speak. So there is juice left in Indonesian assets. I think we will continue to see fundamental support for that. Even though, again, in the near term, every now and then, because of the global sentiment, we cannot escape from that. We will have to suffer a bit of drawbacks every now and then. But fundamentally, we continue to see support there. I think going by the asset markets, for instance, I think equity markets have benefited from a few blockbuster listings. As you know, Gojek plus Tokopedia, GoTo started to list. We also have a few big tech unicorns that started to list. All these are making, I think I would say, Indonesian assets not yet a big darling in the global space, but really the prima donna that is starting to gain attention. I think that will especially attract some of the inflows into equity markets, especially. On the rupiah front, I think obviously if US dollar continues to run up, Asian currencies overall and Indonesian rupiah currency specifically, I think also be affected. That's a matter of life, so to speak. But fundamentally, because the other major currencies, be it euro or Japanese yen, as you know, also weakened, I think it takes a bit of the heat out from emerging market currencies, and that's beneficial for Indonesia. And let's not forget, I think we, as a central bank, Bank Indonesia, does have a lot of ammunition left in foreign reserves that will be able to utilize when the time comes to essentially come in and support our currency. So all these are fundamental factors that continue to be, tailwinds for Indonesian assets, even if we do experience every now and then a bit of that, goyang-goyang from global market sentiment.
That will conclude our session today, Wellian. Thank you so much for joining us today on One Wealth Outlook. we definitely looking forward to for you joining us again soon.
Thank you, Ever.
Sekian informasi dan analisis kali ini bersama Bapak Wellian Wiranto selaku ekonomis dari OCBC Group. Untuk mengikuti update pasar terkini, Anda dapat mengakses weekly market journal kami melalui link berikut, dan jangan lupa untuk memfollow kami dengan mengklik tombol subscribe. Saya Ahmad Enver, nantikan One Wealth Outlook berikutnya di minggu depan. Salam DAYTB.